Two new economic reports hit the news wires on Thursday morning. Both were important, yet each one had the opposite implications for the trend. The market chose one report over the other, and the question is why? And what can we learn from that? This is Vadim Poklopkin reporting for Elliott Wave International. Both reports came out at the same time, 8:30 Eastern on Thursday morning. One was from Europe, where the European Central Bank said that they decided to keep the ECB interest rates unchanged. That suggested that the European economy was getting stronger. The second report was from the United States, where the weekly applications for jobless benefits fell to a 3-month low. That also was a sign of economic improvement. Immediately after, the euro jumped to a new high for the year against the US dollar. But why did the euro gain and not the dollar? After all, the news from the US was also positive. The answer comes down to understanding market psychology. All things being equal, it's the bias of the traders that determines the market's fate. The question is, how do you know what traders are thinking? That's where Elliott Wave analysis comes in. Wave patterns in price charts reflect the struggle between the bulls and the bears. So by tracking wave patterns, you can anticipate which side will ultimately win. Let's take a look at what the waves were saying before the surge in the euro on Thursday. The day before, Elliott Wave International's Currency Pro service told subscribers that the euro was forming a wave pattern called a triangle. It's a pattern that moves against the primary trend. So when it ends, the old trend resumes, in this case up. On Wednesday, that allowed us to make a very clear forecast for the euro-dollar. From nearby levels, further consolidation through waves D and E of the unfolding triangle should set the stage for a thrust to a new high for the year above 138.24. On Thursday morning, not only did the euro hit its Elliott Wave target, it actually went as high as 50 points above it. And the lesson here is obvious. In the world of finance, where every day you have multiple news competing for your attention, focusing on market psychology goes a long way. As for the euro-dollar, now that it's met its wave target, Currency Pro service says that any upward potential will likely prove limited.